Processing automation, minor facility improvements, and maintenance. Now, I would like to invite Andrew Storter, President and COO of Sundial, to provide some further remarks related to operations.
Thank you, Jim. While the industry will continue to see volatility, we remain committed to cultivation excellence as Sundial's core competency. Our continued focus on inhalable products provides the best opportunity for long-term sustainable growth. Let me update you on some of the progress Sundial made in 2020 and the fourth quarter. At the beginning of the year, we announced that we would change our sales mix strategy and focus on driving
I'm not sure if you guys can hear me right now,
branded product offering,
but leave a comment in the live stream and let me know.
We made good progress in this area and increased our branded net cannabis sales to 75% of total cannabis sales in 2020 from only 20% in the previous year. A crucial change made in 2020 included the restructuring of our cultivation processes. To deliver on our small batch at scale promise, we need to continue to develop capability and competency in cultivation. Several of our competitors have recently divested from cultivation because it's challenging to do it consistently and at the same time continue to evolve product offerings that the consumer wants. While we have made significant progress improvements in cultivation over the past 12 months, we still have work to do. I am proud of our team's accelerated improvements in quality, potency, yield, and cost throughout 2020. Since our cultivation restructuring efforts started, quality metrics have consistently improved. In the first half of 2020, our average weighted potency was in the mid to upper teens. As we adapted to consumer preferences in the last 3 months of the year, we achieved the company's highest weighted average potency in its history, above 20% THC, and we still continue to see increased results. In order to consistently deliver on our top leaf brand promise, we made the decision to improve key quality processes, including hang-dried, hand-manicured, and only hand-bottling our flower offerings. We've also recently completed R&D on several new cultivars that we are excited to bring to the market in the second half of 2021. To ensure we continue to provide the highest quality products, our quality assurance team has recently begun performing potency testing on our cannabis plants during their growing cycle. We anticipate this will help identify the sweet spot for harvest, ensuring consumers get the freshest and highest quality products available. We have also simplified our supply chain and rationalized our SKUs across all brands and formats. Given the current market dynamics, we took a proactive approach with customers to limit SKU proliferation and maximize shelf space and rate of sale with an optimized portfolio approach. We went from more than 100 SKUs at the beginning of 2020 to less than 40 SKUs at the beginning of this year. The company continues to develop a robust innovation pipeline. We continue to diversify our product mix and ramped up our pre-roll formats, where we increased production by over 200% in the fourth quarter and into 2021 to meet consumer demand. We also added solventless extracts in the fourth quarter of 2020 with the launch of our top leaf bubble hash. We entered into a license agreement with Simply Solventless Concentrates for the processing and manufacturing of a suite of solventless cannabis concentrates. Finally, we added edibles to our portfolio in the fourth quarter of 2020 through a sales and distribution agreement with Chocolate, an Alberta-based chocolatier. Industry-wide price compression remained a headwind for our business in 2020. We took the decision to monetize a portion of our inventory at lower prices in order to right-size the composition and mix of our portfolio products. We continue to focus on competing in the premium segment and generate greater margins. To maximize our product mix and deliver better value to the consumer, we are going to be purposeful on how we engage in the rampant price compression that continues to challenge profitability in the industry. This may lead to lower top-line growth in 2021, but a stronger product mix supporting our beliefs that higher quality products that deliver against their brand promise will be preferred by consumers and customers in the long term. Now, in the first quarter of 2021, we are seeing a softening industry in key provinces. This can be attributed to both retail sales and provincial boards managing inventory and SKU rationalization efforts. We do anticipate this dynamic to impact most of the Canadian industry license holders. In the first half of 2020, we had to curtail our cultivation and harvesting activities to match market demand. While this decision certainly impacted our business results, we were able to increase our throughput while also reducing our costs. We increased the number of cases delivered on a monthly basis from 12,853 cases in January to 24,847 cases in December of 2020. Cultivation and production costs were reduced by 75% from $22.4 million in the fourth quarter of 2019 to $5.7 million in the fourth quarter of 2020, compared to a 48% reduction in grams harvested in the comparative quarters. We continue to increase our investment in our portfolio brands through targeted sales and marketing initiatives. As a key priority for us includes increasing points of distribution to facilitate consumers' access to Sundial products. We are currently in the process of scaling our own internal sales force for the majority of the provinces while we run a broker model in Quebec. Given our management team's expertise in developing route-to-market capability, we are betting on our ability to drive sustainable ROI through breadth and depth of coverage through our in-house sales expertise. We are already seeing progress in this investment as we drive distribution along with price and promotion learnings with key customers across the country. We certainly had a transformative 2020 on foundational areas of our operation. These changes and improvements take time, and we are far from done on several fronts. Challenging the expected and learning from doing supports a culture of continuous improvement at Sundial. While we understand we still have work to do on driving a sustainably profitable business, we remain encouraged in the progress made this past year. With that, I'd like to turn the call back to Zach for closing remarks.
Thanks, Andrew. This past year was a remarkably difficult year, and not just because of the pandemic. Sundial had to make many difficult decisions under new management in 2020 to ensure survival and greater stability. We are now able to lift our heads up and think longer term and strategically versus last year when we were largely forced to play defense. It's been a privilege to work alongside the Sundial employees whose dedication and commitment has never wavered. Together, we have made tremendous progress. I thank our team for their efforts. I thank our customers for their trust, and I thank our shareholders for their continued support. I believe that Sundial is better positioned for success today than at any time since inception. Thank you for joining us today, and please stay safe. I will now turn it back over to the operator for the question period. Thank you.
Thank you. We will now begin the question and answer session. To join the question queue, you may press star, then 1 on your telephone keypad. You will hear a tone acknowledging your request. If you are using a speakerphone, please pick up your handset before pressing any keys. To withdraw your question, please press star, then 2. If you are participating online, you can submit a question using the Ask a Question tab on your screen. We will pause for a moment as callers join the queue. Our first question comes from Tamy Chen of BMO Capital Markets. Please go ahead.
Great, thanks for the question. Zach, I was wondering if you could elaborate a bit more on this robust pipeline that you referenced when it comes to additional strategic investments, whether it's types of businesses or structures of the agreements or geographies and markets that you'll have in this pipeline. And then broadly speaking, just wondering why Sundial's kind of taken this bit of a additional strategy to kind of embark on these additional investments. I mean, what is kind of the end game or thinking on this strategy?
Sure. Thanks, Tammy. Thanks for the question, and good morning. So we're not going to give a lot of in-depth commentary on the specific transactions that we're working on today. But what I can tell you is that, generally speaking, the pipeline that we're looking at falls into two main categories. One would be more vanilla M&A. And the second would be direct or structured investments. And in terms of your question as to why we're deploying capital in this manner, we view the cannabis sector, not just in Canada, but internationally as well, as a sector where capital is, in certain cases, being significantly mispriced. And so any sector where you have the banking community either on the sidelines or not participating and inefficiencies within the credit markets, you tend to see very interesting and attractive risk-adjusted return opportunities. And we are very attracted to those opportunities and started to execute in capital deployment in that direction.
Understood. Okay. And my second question is, just noticing this quarter also has some inventory write-downs, and that's been occurring through the past year. So I'm just wondering why the ongoing write-downs. What are they a result of? Is it just ongoing market pricing changes and resulting in you taking continued write-downs? Thanks.
Yeah, so first of all, let me just say that our team is working aggressively to bring greater efficiency to our cultivation processes and outcomes. And so, number one, we see this historic performance as unacceptable. But we have been operating against a backdrop where, for example, if you rewind to the beginning of 2020, flower with potency, in the mid-teens, would move in the marketplace and was quite liquid. And with the changing consumer preferences and this potency chasing behavior that we've witnessed, by the end of the year, product that even at 20% potency would be less liquid and be very difficult to move through retail. So we've been making aggressive changes to improve outcomes and ensure that we're delivering and delighting consumers. And that has led to us having certain product that needed to be impaired from an accounting perspective, to the extent that our terpene profiles and potency on average harvest increase as they have. Those write-downs should diminish substantially, and it's a key focus for the team going forward. You also have pricing impacting that dynamic as a lever. And as you well know, the value segment is really on its way to effectively sort of blacking out the sun, in the space. North of 50% of the industry in Canada is in the value segment, and we continue on a weekly basis to see prices dropping. And so, for example, we saw prices over the last year for 28-gram value packs, for example, in certain instances, drop by 50%, over the course of 12 months. So that's been a dynamic that's also, forced us to take another look at our inventory valuations.
Got it. Thank you.
Our next question comes from Vivian Azer of Cowen. Please go ahead.
Thank you. Good morning. I wanted to follow up first on the pricing question, please. So clearly price deflation in value. Sounds like there's even price softening at a 20% THC potency level. So is there any potency level where pricing is holding up?
Andrew, do you want to take that?
Yeah. Hi, good morning, Vivian. Thanks for the question. Yeah, look, I think it's moved very quickly. So as Zach mentioned, mid-teens at the start of the year. I think you're seeing, 20%, midway through last year. And then as you get into the back half of 2020, 23, 24%, to play in that premium segment is really where the market's going. So, I think the question that we're trying to answer right now, too, is what is the unconstrained demand when you think about potency and you think about the premium segment? Value has moved so quickly. It's such a large part of the mix right now by retailers and by boards. It's hard to get a grasp on looking at that premium segment, on a pro forma basis. But we do look at other industries or other, more established markets in the U.S. And, we're seeing that potency will obviously start to level off at some level. and we will see premium start to play its role, and we forecast it to be 30 to 35% of the industry segment over time. Certainly in the areas we play in on inhalables, but potency is moving fast. Anything 23, 24 right now and above is doing very, very well, and I don't see that stopping anytime soon.
Okay, understood. And, given the restructuring, which is obviously very appropriate, to your cultivation practices, do you have a sense for, when we might see, a revenue base that looks a little bit more like you were doing, call it 2Q of 20, obviously the mix being very different. How much longer do you need to continue to kind of vet your cultivation practices, dial in that data-driven approach to actually really scale your revenues? Thanks.
Yeah, look, I'll take that. I think you said a key point there, right? I think on mix, and I think we've been pretty consistent on that. Our focus in 2020 was to make that transition to branded sales versus wholesale, and we did this. 75% of our total revenue mix was in branded versus just 20% in 2019. So when you're looking at year-over-year comparisons, not all revenue is created equally. And I think that the key one, Vivian, if I was to kind of point you in a direction around how we're thinking about it, is our branded product sales grew exponentially, actually by 410% when you think about 2019 versus 2020. That's solid, and we're seeing the benefits of that from penetrating the market, and we're also mindful of the fact that, as I stated, not all revenue is created equally. So we've got to be really mindful of not getting into that rat race when it comes to price compression and contributing to the consistent price deflation that we're seeing. So we're going to continue to stay focused on the premium segment, the core segment. We see value in that over time. Certainly cultivation and potency is going to help drive that. We've also significantly invested in our in-house sales breadth of coverage, which I mentioned in my opening remarks. So we're putting the elements in place. Foundational to that is cultivation excellence, and we feel pretty confident about that. But I think that mix piece that you mentioned is super critical to understand the transformation we've made from 19 to 20, and we're going to continue to do that.
Great, and I'll try to squeeze in one more because you mentioned the sales force. So appreciate your confidence in management competencies around being able to run an internal sales function. We've seen some of your competitors actually move in the opposite direction. Are there KPIs that you're monitoring? I'm sure there are that would perhaps inform a move away from that, because it tends to be certainly more SG&A intensive to run your own sales operation. Thank you.
Yeah, great question. Look, we pretty much went through 2020 with a fairly light retail approach across the country. We are running a hybrid model, so we do run a broker model in the province of Quebec. We feel that's appropriate, and we've seen good progress in that region. And then we decided for balance of Canada, English Canada, to run our in-house. And look, by far the number one metric we're looking at is distribution. We're looking at, how do we cover the retail expansion happening in key markets like Ontario. So we've got tremendous experience in-house on ability to drive world-class field sales management, and we have every intention to doing that. And, we view it as an investment, not a cost, and that investment needs to pay out. But, put in perspective, over the last probably 4 weeks here, we've increased our breadth of coverage across the country in our in-house sales force by close to 50%. So, we're anticipating we're going to be able to, add value to retailers over time here that we just have not had a chance to get to back last year. So we're excited about that. We're optimistic, and we are seeing some very good initiatives with regards to distribution in the early part of 2021 here.
Understood. Thank you very much.
Thank you.
Our next question comes from David Kideckel of ATB Capital Markets. Please go ahead.
Hi, good morning. Thanks for taking my questions, and congrats on the quarter. I want to go back to the strategy here. Considering Sundial as a licensed producer and also seeing some of the pretty impressive deals you're striking right now, we're considering this as also an investment vehicle, which is arguably a big part of the reason with the disconnect between valuation and stock price. So I'm wondering, Zach and team, if you can maybe just, with stopping short of giving guidance, can you give some goalposts to us for how do we look at this? Because in our opinion, the street is just not taking your investment vehicle side of the business into account to attribute value. So if any color you can give, I think could help us how we understand how you're moving forward with that strategy. Thanks.
Yeah, thanks, David. Look, we'll do our best to answer the question. I would just say that, as you're well aware, there's no shortage of, bold claims and promotional statements that have been made, in this industry historically, and we're working really hard to quickly get to profitability and let the results and fundamentals speak for themselves. I can tell you that we expect to be able to update you and the rest of the market on some of our initiatives in the coming months, even within the next 30 to 60 days. So we have quite a bit going on at Sundial. When you point to valuation, I would just make two simple points. Clearly there is a lot of interest in the growth of the sector in Canada and beyond. So that's certainly impacting equity valuations across the board, not just for Sundial. And then additionally, when you think about our capital resources and cash balances, I would make the statement that if you look across the space and you look at where financings, both debt and equity, are being struck today, you can quickly reach the conclusion that a dollar of cash in this industry is actually worth more than a dollar of cash. So I think those two factors in some combination, are impacting the broader market and investors' views of Sundial, but don't want to comment beyond that.
Understood. Thanks for the color. And then maybe I can just ask a question as well about one of the PRs you made this week with the JV and with the SAF group as well, but specifically on the SPAC strategy here. Given that some of the capital in the press release indicated that some of it will go towards the SPAC, I'm wondering which sector or subsector, say, within cannabis, are you looking at? Is this relevant for a specific geography? And is this just one of many of your SPAC strategies that we can expect? Thanks.
Sure, David. So just to clarify, working in reverse order. So we're not going to comment on the SPAC until we have appropriate filings made. So we've referenced it
that's
as a
important right there,
opportunity, and we're very clear about that in our public statements. And you should think about that as very separate and distinct as an opportunity from the opportunity fund, which we are launching currently. So what you have is a joint venture where the operating experience of Sundial and its principals have partnered with very deep and seasoned private equity experience at the SAF Group to tackle a number of initiatives in the space. And we look forward to updating you on those initiatives with much greater detail going forward. But in terms of this opportunity fund, we will be a lead investor. We will help manage the general partnership, and we expect to see fee-paying third-party capital in limited partner form join us in that fund for those initiatives.
Understood. Okay, thanks for the color. And if I can just squeeze one more quick one in here. Just back to your revenue mix for the quarter, looking at the numbers here, about 25% of overall revenue was from vapes, obviously higher margin than dried flower, which was at about 70% product mix. Just wondering, do you expect for the next quarter, is this a similar revenue mix here, or do you expect, for example, vapes to increase share or decrease for that matter? Thanks.
Thanks, David. A good question. Andrew here. I'll just address the vape question. Look, inhalables obviously is a key part of the strategy. We've been pretty clear on that. We were early to the game, late in 2019 when kind of phase 2 came out, and we came out with a really great offering on vape under our Top Leaf and Sndl brands. So we're really happy with the first part of that launch, and we saw good traction in the mix there. And you're right to say, from a mix standpoint, it is accretive for us. That said, there's been a tremendous amount of competition coming into the space. Again, vape is like any other segments we're in. It's facing a lot of new industry players, and they're differentiating by price. And I think that's going to create a bit of a headwind for us in regards to how we continue to compete at the prices and the value equation for the consumer that we're looking to obtain. And I don't see that stopping because, we're seeing, again, more entrants come into that space. But here's a point I would make as we think about, the next evolution of vape. We do have some very exciting innovation that we're looking to launch in 2021 in the vape segments. And, we've done what we need to do with regards to, competing in value with 1 gram vape, but it's certainly not a key focus. That will be lying primarily with Top Leaf and Sundial. And we're currently in 2 formats of extraction on that vape, which is ethanol and CO2. And as you know, there's certainly more opportunities there, certainly on the hydrocarbon side, to provide further differentiation. And we intend to do that, which should drive better value for consumers and obviously be accretive to our margin mix. So we're excited about that offering, but certainly competitive early part of 2021. We're seeing that in the numbers.
Okay. Thanks for taking my questions. And again, congrats on the quarter.
Thanks, Dave.
Once again, if you have a question, please press star, then 1. Our next question comes from Doug Miehm of RBC Capital Markets. Please go ahead.
Yeah, thanks. Couple questions. When you think about the invested capital between the 2 areas, let's say between M&A to build the business and then, I guess what you call your investment side of the business, what do you expect the mix to be there?
Yeah, Doug, that's a great question. We're working actually on a number of live M&A files. There are elements of timing and a lack of certainty on execution, which could cause a swing in that answer by hundreds of millions of dollars. So this is not something that we have set in stone or budgeted out. We are underwriting and chasing opportunities that we think are highly strategic for Sundial. And, the timing and quantum ultimately is something that, we're not going to give guidance for today.
Okay. When you think about what you're growing today and your ability to get to that 23 to maybe 25% potency, can you tell me what percent of the crop that you're growing is getting to those levels? Because one of the things that I think we should all be concerned about is, are we going to see regular write-offs that actually should be included in your cost of goods if you can't meet the 22 or 23%?
Yeah, I'll take that. So you're right, Doug. It's something that it's a key focus for us with our core operations. And as we've said, we've made tremendous progress in terms of the potency of our average harvest, particularly starting in the fourth quarter. We've also brought in some new genetics that are showing very, very promising results. But we are working to, avoid some of the poor cultivation outcomes that, plagued the company earlier on. And it's absolutely essential to getting our costs down and ensuring that we are not wasting capital when it comes to our cultivation activities. So it is a key focus, and it's a great question.
Yeah, but can you give an idea? Like, is half of your growth not meeting the sort of hurdle, or is it a lot lower than that?
Yeah, I would say in rough magnitude, at our worst in early 2020, and you can see this through the impairment analysis, is that yes, roughly half at our worst, was not suitable, not meeting the objectives that our consumers have in terms of product potency. But that number has been reduced and continues to be reduced quite materially. And we're going to be able to talk more about that in the coming quarters. But given the fact that we just revamped all of our cultivation practices in the back half of 2020, that number is still improving and is not static.
Okay, excellent. That's it for me. Thank you.
Our next question comes from Sean Murr of Canaccord Genuity. Please go ahead.
Hi there, and thanks for taking my questions. The first one I got here is just on the market share. So it's declining again for a second straight quarter to 2.7% in the quarter, and that's down from above 5% 2 quarters ago. So you're showing strong sales momentum on the vape side, and from prior commentary, it's pretty obvious that the market shift and value is the key driver here. And so keeping in mind Andrew's commentary that focus will be on the premium segment going forward, I was wondering if you could provide any commentary on how you see that market share shaping up in the short term over 2021, and when internally do you expect it to start ramping back?
Sean, thanks for the questions. Andrew here, I'll take that. So maybe I'll start with a bit of the industry kind of view here, and then I'll kind of filter it down into how we're looking at that for market share for Sundial branded products. So look, I think when you look at the industry, when you look at an annual compound growth, it continues to move in the right direction in this country, and that's good. But it's like any other CPG business. There is seasonality, and there's other headwinds and tailwinds that are going to impact industry, and rightfully so impact the ability for some producers to penetrate the market. So when I look at Q1, it's soft across most provinces. Ontario, I was just on the phone this week with the Ontario leadership team, and their performance is minus 17 on industry versus December. And February, March are showing slight growth, rolling 90, but coming off a very small base. And they've been obviously having stores closed since November of last year. BC showing preliminary industry numbers at about minus 7 decline in February, March, or January, February, and Alberta's double-digit decline on the industry. And I tell you that because I think it's important to understand that you can still grow market share in a declining industry. And in some of the markets we're playing in, some of the key markets we want to win in, we're seeing some prelim results that would tell us we're moving in the right direction there. But I think it's going to continue to be very, very competitive. I think we're at a point in the industry right now where you're having 7 to 9 new license holders being issued by Health Canada a week. You've got 100 LPs sitting in the province of Ontario. You've got a number of 200 coming in this year at some point that they're stating. So it's going to continue to be a big challenge to grow market share. But I'm really confident in our ability to now that we're investing in our sales and marketing, we are focused on a commitment to cultivation. We have some great brands. We have some great relationships with retailers. And I'd also be mindful of when we're looking at these data sets, whether they're headset or whether they're some proprietary retail platform that a retailer is putting out there that you guys are looking at. There's other factors that are impacting what LPs are doing well in those retailers. So from a holistic side, we're confident that we can grow market share. We're seeing good signs of that. There's certainly going to be high levels of competition, but it's a focus for the group, and we're making the right investments into how we want to do that. And we'll see that momentum continue in 2021.
Thanks for the color there. And then the second one was just on a brief update on what's happening with the chocolate arrangement. So have any products hit the market there, and if there's any commentary on how they've been received? And also, just considering all the moving parts that are in the story now, can you speak to any pipeline or desire for adding on any other contract manufacturing partners?
Yeah, Sean, it's Andrew. I'll take that again. So yeah, last year we ended up signing 2 contract manufacturing partnerships. One, as you mentioned, with Chocolates, who's local Alberta chocolatier, makes phenomenal product, and we've seen consumer offtake on that in the province of Alberta, do really well. We launched that late last year by the AGLC, and we're getting ready to put that into other markets, this year, and we're excited about that. So we'll continue to see good products being released under that partnership. There's some very cool innovation coming along those lines as well that Chocolate is working on, and we're excited to be working with them to bring those to Canadian consumers across the country. We also signed a licensing arrangement with a company called Simply Solventless out of our Rocky View facility, and that's very much focused on concentrates. They're specialized in that, and we're gonna look at the playing field. Obviously, the Indiva investment that we made as well in early part of this year, and so we're going to continue to kind of look at the country around opportunities. But I would mention our core competency will still remain largely in that inhalables focus, and we're very dedicated to cultivation being the foundational piece of that, and we'll look at those opportunities that come up, and there's certainly going to be more moving forward.
Thanks for that. That's all my questions.
This concludes the question and answer session. I would like to turn the conference back over to Zach George for any closing remarks.
Thank you, and thanks to everyone for joining our call today. Take care and stay safe.
This concludes today's conference call. You may disconnect your lines. Thank you for participating and have a pleasant day.
All right, guys. So that's it for the earnings call for their Q4 and fiscal year of 2020. And hold on, I'll pull up the stock right here. You guys can hear me right now, right? I just want to make sure that you guys can hear me. So yeah, just leave a comment in the chat. And let me know if you guys can hear me right now. Yes. All right. So with us trading at $1.58 right now, we're still up more than 2% from where we opened. So our high for the morning was $1.67. So if we keep on going how we're going right now, then I think we can hold up pretty good. Because at 10:30 we were at $1.64. So we're only down 6 cents. Oh, we dropped down a little bit more. Yeah. Well, now we're down 8 cents from where we were. We were down 8 cents from where we were in the morning. So I will be making a much more in-depth video on what we like. I'm just gonna cover the entire earnings call and show like the most important information from it, the positives, the negatives, and I'm just gonna go more in depth on it. So for the people who either joined the live stream late or the people who didn't get to watch the live stream at all, then I'm just gonna summarize everything for people who missed it. And yeah, and $1.48 is our support line. So if we do dip below that, then I think we could possibly go, if we dip below our $1.48 support line and we stay underneath that line for like too long, for like most of the day, then I think we could maybe possibly drop down to below $1.40 and then possibly even into the $1.30s. But I really don't see the stock going back down to below $1.20 in like ever again. But then again, that's just my opinion. And like I always say, it's just my opinion, and I always could be wrong. So just please make sure you guys do your own research on this too. And yeah, so I mean, we're at $1.55 right now. We've been holding up pretty strong, even after this earnings call. Because I would say normally, after earnings calls, we do get a little bit of a dip. And I mean, we're only down at $1.56 right now. So if this is a dip we're gonna get from the earnings call, then I'll take that. That's not a big dip at all. But I think possibly, just depending on how the markets react to this, we could possibly reach our support line, but if we keep on going how we are right now, then I do not think we'll break below that line. So, and you guys are asking, should I sell or should I hold? Personally, for me, this is a long-term investment, and actually, at first, I was thinking of this as a swing trade, but then when I actually started looking into the company more, and they got that partnership with SAF Opportunities, and they're increasing their revenue, they have no debt, and yeah, I mean, this company, I feel like they have great fundamentals, and they have a great young and passionate team leading them. So I really feel like this company is going to be like a great company, and that partnership with SAF Opportunities is really what helped them, in my opinion. I think like that is what like solidified my position, my long term position with this stock. So yeah, I think in the long term, possibly by the end of the year, this stock could be above $4 to $5. But I mean, you never know how things can go. We could reach $4 to $5 in maybe 6 weeks from now. But I think like my price target for Sndl is going to be I'll put it at $6, and it could be a couple months from now, or it could be by the end of the year. Because I mean, especially with how the markets are right now, it's hard to predict anything. So yeah, I'll be making a much more in-depth video on what you guys like, what the summary of this earnings call is, the good news, the bad news. So make sure you guys like stick around and watch that later on. I'll try to have the video up for maybe around 4 or 5, hopefully. 'Cause I mean these videos take a while to make. So how did the earnings go? The earnings went pretty good. Mostly all positives, not many negatives, and that's very good. We had very few negatives. So, what are your thoughts on CTRM? I have a big position on that, and wondering what your thoughts on recovery. Let's take a look at the stock. See if I can just like get anything from just looking at the stock chart. I don't really know much about them. Oh, they are down a little bit today. They did reach above $1. Let's look at the 5-day chart. Okay, so $1.06 right there. So for people who are in CTRM, $1.06 is the line that you're looking to get back above. Because you see how you're $1.06, that's the highest point. You reach it twice, so that's the highest point you reached in the last 5 days. So if you can really get back above that line, and I mean, it was at $1 this morning at 10 a.m. So only 6 cents away from like, the high of today. So yeah, if you can break back above, I would say right here, look for the break back above $1.03. If you can break above that and then see some real promise, then so break above $1.03, then there might be some like faith back in the stock. And then if you can get above $1.06, then I think that will definitely have like an upwards pattern right there, and yeah, and who knows where we can go from there. Barry, it's not about anyone's guess of right or wrong. This is what we need to utilize our knowledge to define the upcoming trends. My biggest disappointment at Sndl, they need to have better team. Oh, really? You think they need a better team? I personally think that like Zach George, I think he's a great CEO. And then the partnership with SAF Opportunities is really like what gives them an even like gives them an even like bigger step. Barry, our worry now is that the market is looking like it's going to crash. What are your opinions of that? Let's take a look at Tesla. Close out CTRM. Tesla stock. Take a look at Tesla stock. Ooh, Tesla stock down $25 today, down 3.67%. Let's take a look at Apple stock. Well, let's say goodbye for Sndl. So I say for Sndl, if we do break below our $1.48 support line, then I would say we can get if the price goes below $1.40, then I say right now is a really good time to buy in. But I mean, really, if you're holding this for a long-term position, then I say do dollar cost averaging, and for those who don't know what that means, just basically buy in each month or each week. So if the price goes up, then it doesn't matter what the price is at. You buy in at no matter what the price is at. So if the price goes down, you actually get to lower your position even more. So that's why I would recommend for SNDL. I'd say right now, like, there is no bad time to buy. For the if you're looking for the short term, then yes, there could be a bad time to buy because the stock could, like how we are up. What are we up? I'm trying to get the 1 month chart for SNDL. It's not loading. All right, well, yeah. So here, I mean, at one point we are at $1.26, and now we're at $1.56. But you could have also bought right here $1.45, and you could have rode it all the way down to $1.14, and then panic sold right there. But then, what was this? Week and a half later, you had $1.62. So I mean, I like people who don't know, I prioritize like buying and holding. And I do a couple like day trades and swing trades every now and then, but for me, buying and holding for the long term or just buying and holding until the price go up basically is really what works for me. I'm trying to read all the comments. Thank you for your time and effort. We appreciate you. Thank you. Thank you for watching. Bro, how much do you think Sndl will close today due to the earnings? So I mean, with a $1.56 right now, if we can start, so I say right here is the first point that we want to look to get above. If we can get above $1.61, and then from there climb back up to like what I look for is just climbing back up to the previous levels. So if we can get back up to $1.61, that'll be good. That'll be a good sign. But then if we can continue to go back up to $1.63, that'll be a good sign. And then $1.65 up here, and then our high for the day was $1.67. So if we can continue to like slowly break through each of these levels right here, then I think that will be a very good sign, and we can definitely close. Like depending how things are going right now, we are in this little downtrend. So I think we could still close in the green, but I mean it all just depends. It's only 11:30. It's only 11:34 in the morning, so we should have to see. Thank you. I just subscribed with the bell. Oh, thank you. Good analysis and keep up the great work. Keep up the good work. Thank you for subscribing, and thank you guys for the support too. That really what like pushes me to keep making these videos. Zach is a great guy. Yeah, I agree. For those who watched my last video and the video before that, I had a quote from Zach George, and I mean, I think he is like the perfect fit for the CEO of this company. Late here. So what's up with Sndl? Basically they talked about how they have it's kind of the same thing that they released with their earnings report yesterday, but today was just the actual earnings call. They have zero debt now. They raised over $227 million in debt. They increased their branded. They increased their revenue by I think 10% to $73.3 million. I may not be like saying that correctly. I don't remember off the top of my head. They announced that they cut down their administrative costs. Wait, hold on, I'm trying to remember. Okay, so they cut down their general and administrative cost by 18%, I believe. So they're actually increasing their revenue while also decreasing their general costs, which I think is a very good sign for any company. And for the people who always say that like, oh, they're in debt. Why would you buy a company that? I mean, they're not in debt. They raised their debt this year actually. But people are saying this company is losing money. Why would you invest in a company that is losing money? Well, first off, the cannabis sector is right now it's small. Like the cannabis market, it's small, but it's growing as Mexico just legalized it. Canada has legalized it. And I mean, once the United States legalizes cannabis, that is really the next step. So, like, most of these cannabis companies are not profitable right now. But when you look at it when you look 10 years into the future, where do you see these companies? Where do you see cannabis in the whole world? Like, yeah, it's just when you take a look at the long term like that, that's how you really get another opinion for like the stock. Oh, we just have this little sharp downtrend right here. Yeah. No, okay, never mind. Right back up to $1.56. All right. Thoughts on Genus and Pelotar? I gotta do more research on those. I know ARK Invest bought Palantir. They bought a lot of Palantir actually. I had a video on that. If you guys just go onto my channel and like search for I believe ARK Invest just bought these stocks. I think that was the title of the video. Yeah, ARK Invest bought a lot of Palantir, so I don't know much about either of those companies. Gotta do more research on those. If you haven't heard of Cino, it's probably gonna double. Gotta look into that more. Just subscribe with the bell too. Thank you for subscribing. Do you hold any AMC? I am personally not in AMC anymore. I think I bought in when it was at around $4, I think, and I sold it when it was at like 14. But I mean, I think let's take a look at AMC right now. AMC stock. Take a quick look at AMC. Yeah, AMC's up at 14 right now. And I was in it before when it was after like the first spike. I sold it. I'm trying to go to the chart here. It's loading. And I bought into it when it's at like $4 or something like that. Do you think Sndl will pass $10? Yes, I think in the long term, I think this could definitely has a chance to reach that $10 mark. It's just all it's a matter of time of when. Yeah, so I bought in around here with AMC. I bought around here. It was around January 25th. It was either January 25th or was it 26th? It might have been 26th, but yeah. And then I sold when it was at like $14, and I think what's the highest it reached? Yeah, the 52-week high is $20.36. I sold when it was around 14, around the same price as that now. So yeah. So I mean, even if I'd never sold, I would still be pretty good. I would still have pretty good profit now. So, thank you for answering my question. No problem. I'm reading the comments. Oh yeah. So what did they say with the earnings call? Yeah. Okay. Let me touch back on that. So yeah, like they talked about. I know in the beginning of the earnings call. I know not many of you were here during that. But at the beginning, they announced it's kind of like they summarized what they said, what they released yesterday with their financial reports, but then also added like some more stuff. So they had these $60.4 million in unrestricted cash at the end of December. So December 31st of 2020, they only had $60.4 million in unrestricted cash. But as of March 15th of 2021, they had over $719 million in unrestricted cash. I mean, that's just incredible. That gives them just so much space and like so much money that they can just work on expanding their company. And we had the SAF opportunities. That was $100 million investment, and now they have a 50-50 joint venture to create Sunstream Bancorp JV. I believe that's the name. Sunstream Bancorp JV. So I mean, oh well, we hit $1.54. $1.54. I'll try to load this right here. Yeah, $1.54, guys. Yeah, but our previous close was $1.54. So we are approaching the red right now. So they increased their unrestricted cash from $60.4 million to $719 million. And hold on, guys, 1 second. I'm trying to pull it up right now. Okay, somebody. Oh, we're in the red right now. Yeah, I mean, this stock chart doesn't really stay updated too well. Okay, yeah, so it says, and it says we're in the red right now, even though we're at $1.54. That's our previous close for the day, and the previous close for yesterday. All right, yeah, so somebody left a comment in on my last video saying that, the reason why Sndl raised this much money isn't from their profits. And I thought, I don't know, in the back of my head, I just kind of I already knew that, so I forgot to state that in my last video. They raised this over $700 million by doing stock offerings and just raising capital, and that allowed them to pay off their debt. Sndl up 6 a.m. today, and the price is still down in volume. Yeah, I think, because we had a lot of volume going into the earnings call, as you guys can see right here in the morning and stuff like that. We just had a lot of just trades. There's a lot of stocks being traded, especially leading up to the earnings call. As we hit $1.67, and then people took their profits, sold off right there. $1.64, sold off, and then reached back up to $1.65, and we sold off from there. Short interest is high in Sndl. I'm not sure what the short interest is right now. Sell. Yeah, I personally, I mean, like if you guys are looking for short term, and you guys already have profits, and you guys aren't planning on holding this for a long term, then yeah, if you guys want to sell, I mean, go for it. I mean, because you could be missing out on a lot of profits. So if you guys are looking for short term, then yeah, I mean, if that's what you guys want to do, then go for it. I mean, I'm not a financial advisor. I'm making I'm making videos and live streaming to help you guys out. So if you guys want to sell, go for it. I just want to let you guys know that. I mean, this company is a great young and growing company in a growing and like a fast growing industry, which is the cannabis industry. So if you guys just back to $1.53. Oh yeah, I was about to say something like that. But yeah, patient. Yeah, I think somebody commented saying I think a lot of patience. I think a little patience goes a long way in stocks. I was about to just like say something along the lines of that. Yeah, like here I wanna show you guys Tesla's 1 year stock. Yeah, somebody said or hang on. Yeah, I'm hanging on, or maybe I can show the 5 year. Okay, yeah, cause I think yeah we're already past the big dip. Okay, so here, take a look at February 21st of 2020 for Tesla. February 21st, and then yeah, the pandemic happened, stuff like that. We hit a low of 85. I know the low they reached was actually $72, but right now it's only saying 85 since it's like a wider like volume margin. So does it show down here? No, yeah, right here. 52-week low, $70.10. So yeah, we were trading up upwards of $180 on February 21st. Then we hit a low of $70.10. But if you guys if people were holding Tesla at that time, if they decided to just hold on and not sell, look what you could have got. Excuse me, I can't speak. Yeah, look, Tesla stock hit a high of like 880. Well, it had a 52-week high of $904. So people who could have bought at the bottom right here at $70.10, just look what buying and holding does. I mean, even now, how it dipped down after the market crashed a little bit, we're at 674. But still, I mean, if you just bought in a year ago, even if you bought in right here at the high out of $180 a year ago, you would still be up an insane percentage, which is just crazy. So yeah, I mean, for people who are new to investing and are just getting started with investing, buying and holding is like the way to go in my opinion if you guys don't really know what you're doing. I'm going all in Sndl 30K shares when it hits $1.50 as well. Yeah, I mean, good luck to you. Good luck to you. Yeah, so I mean, this is that's a 1 month chart. Let's take a look at the 5-day chart. Yeah, so we hit $1.40 right there. Then yeah, my support line for the stock right now was at $1.48. So yeah, back up at $1.54. So that's a good sign. With the hype around Sndl, a positive catalyst can easily kick the price to $2 to $3 in my opinion. Even if that doesn't happen soon, it's a $10 stock long term. Yeah, I agree with you on that. I'll diamond hand it won't sell until it hits $3. Hey, good luck, man. And yeah, like especially that SPAC, because we saw CCIV. We've seen the SPACs like this year and last year. The SPACs are like those SPACs just take off. And with Sundial having that SPAC, like I mean they didn't release further comment on it, but we just have to wait and see. Oh, girl I work with bought Sndl at $350. Lol. Oh God. Feel bad for her. Hey, but if she just buys and holds, she might be profitable very soon. You never know. Yeah, like I think that SPAC merger could push us back up to $2 to $3, and I don't know if I don't know if Sndl and like SAF Opportunities are gonna merge into one stock to make it Sunstream Bancorp JV, or if they're gonna merge into Sundial stock. I don't know what's gonna happen. When like they said, they're probably gonna release further information on that. So we just have to wait and see. So maybe I'll hold, not a rush. Yeah, I mean, I think. Oh yeah, see, look, back at $1.55 right now. Yeah, this chart does not really update too good. Yeah, we're back. We're back in the green right now. So I feel like this dip that we were seeing right now. Why the crash? What did I miss? So I feel like this dip that we're seeing right now is just the classic after the earnings call sell off. I feel like this happens with every single earnings call. People just buy in, ride the wave, and like see how people bought in, and $1.67. The people sold off, and we got all the way down to $1.60 again. So, yeah, I feel like this is just the basic like after earnings call dip. But I mean, we're holding up really strong. It's not like we're still like how we just got back up to $1.54, $1.55 now. We're still green for the day, which is great, I think. When do you think this would hit $10? 1 year maybe. Thanks for doing this, by the way. You were awesome. So when it comes like predicting like when it comes to like predicting like long term like that, like $10, like I feel like it all depends on their quarterly performance. If they can continue to increase their numbers like after each quarter, and then like by the time they have their next year's like financial results, then like if everything is going how it's going right now, then I think we could reach above $10 or at least above $6 by then. But then again, that's if they keep up their sales and stuff like that. And with the direction they're going in right now, I think they can even beat what they're doing right now. And then obviously if like there's factors like if the United States legalizes cannabis, that like right there, that'll make every single stock in the cannabis sector jump up. So it's really hard to predict like when this will reach $10 or when this will reach something. So yeah. Someone said to become $10 stock when then the company would need to be a $15 billion company. And yeah, I haven't crunched down the numbers, but yeah, I could believe that. And right now, Sndl's market cap is 2.42. Oh, I mean, I have everything. $2.42 billion. And keep in mind, this is because this is $2.42 billion, and they're only in Canada right now. They haven't moved over. They haven't tried to go overseas yet. They haven't expanded into Mexico, and the United States still hasn't legalized cannabis. So, I mean, this partnership with SAF Opportunities is if they do want to reach that $15 billion company mark, then I think that partnership with SAF Opportunities is really what like gave them that extra step, and hopefully they can one day reach that. Yeah, but I think we could at least get to above like $6, possibly by the end of the year. I got 20K shares at $1.15 a share. I'm holding and grabbing 30K more. Good luck, man. I bought into Sndl when it was about $1. Not a dollar. It was at 70. It was at 80 cents. It was at 80 cents, and then it dipped down to like 77 cents. So I bought more, and I remember like for the next week. Actually, I can probably pull it up right here. Pull the 6-month chart. Someone said hold over 200 million volume and it's dropping. Yeah, we're back in the green right now, so that's good. Yeah, it's dropping just because of that basic after earnings call dip. That happens with like almost every stock. So it's really nothing to be worried about if we do dip down a little bit more. Because like I said, it's something that happens like after. I swear, it's every single earnings call. If you go look at like stock charts and look at companies' earnings call coming up, you'll see like a run up in price. And I mean, hold on, let me get back to that 1 second. Okay. Yeah, and trading leading up to earnings calls can actually be like a good way of trading. Like that's what I do sometimes with some of my swing trades. I'll look for companies who have an upcoming earnings call in about a month or like a couple weeks. And so I'll buy in at that point that it's at now, or I'll wait for a little bit of a dip and buy in, and then I'll ride the price up to about the earnings call, and then I sell off. And that's what we saw today. As I said, we saw. I'll go back to the one day chart in a second, but we saw the price go up to $1.67, and right there, people took their profits, and then the stock went down to where it is now. So, okay, yeah. So I bought in before this big jump, and our 52-week high, $3.96 right there. I bought in before this big jump. I bought in when the stock was right here, about right here. Cause I bought it. It was the day after GameStop. It was the day that GameStop and like AMC all got like delisted. Like you couldn't trade them on Robinhood, and then so I was kind of riding the wave, and then so I bought into Sndl when it was at 80 cents. Then it dipped down. You can't really see it here, but it dipped down a little bit more to like 60 cents, and then as you can see, just went back up, and then like February 10th we hit 295. Well, no, at that point we actually hit our high of 396, but just like that, it wasn't up there for long, so that's why it only shows like 295 at the highest. But yeah, and then we've just been down on this downtrend. But over the last month, we have really look. We broke through a point right here over the last month, $1.53 and $1.62. So when it comes to looking at stocks, you want to look to break above your previous points, and that's what we did there. And they don't have a 3-month chart. I don't like that, but here. So it's easier to see it on Robinhood, but Robinhood is not loading on my computer right now, so that's why I don't have it open. But right here, $1.70, like right here. Okay, so it's about like more like right here, not where that point is, but where my mouse is. Like you can, yeah, I can't zoom in on here, but you can see a lot more detailed and only bums panic sell. That's why you broke. Yeah, that's what I'm saying. You don't panic sell. Panic selling just makes you lose money. If you just buy and hold, then like you can easily be profitable. It's all about a mindset. But yeah, so the point that we're looking to break above is $1.80 because this chart is too zoomed out. You can't really see it. But the point that we're looking to break above is $1.80, and we got up to $1.74. I think was the highest. Like we hit $1.74 in after hours. So if we can just break above that, then that'll be a very good sign. Yeah, like $1.74 is what we hit on Tuesday too, and we got like in after hours yesterday. We got it doesn't show it because it was the after hours, but after hours yesterday we got back up to that point. Oh no, this is actually. Oh, never mind. This. Oh, never mind. Is it showing the after hours? Oh no, that's what the market's opened at. All right. Yeah, and then yesterday in after hours we ran up to $1.74 again. So we were so close to breaking that point, but $1.74 is our resistance line right now. So we should have to break above that if we want to get above to $1.80 and then above to $2. I feel like I'm just rambling right now. Sorry. Let me check the comments again. We gotta hold this one, boys. Agreed. When the United States goes fully legal, it will explode. Just wait for it. I agree. I feel like the whole cannabis sector will explode right there. Holding to $3. Same. Well, I'm looking to hold this one for like not just like a midterm. I think this will be a long term. So yeah, if it does reach $3, I'm not planning on selling then. I kind of like I feel like my like the price that I want to be at before I even think about selling is $6, but I don't think we'll reach that. I think by the end of the year we can reach that. I don't know how soon. Cause like I said earlier, it's hard to like put a timestamp on those. I was late. What happened to the meeting and why is it trending down? So the reason why it's trending down is because normally after earnings calls we do see a dip. That happens with like every single stock where there's a dip after the earnings call, and that's kind of what we're seeing right now. So it's really not something to worry about. It's just the stock falling. It's just the stock being the stock market basically. And yeah, so there's really nothing to worry about right now. But our $1.48 is our support line. So if we do break below that, then I would say like if we break below $1.48, the support line, and we stayed below that line, and if we stay below that line for too long of a time, then I think we could get a little bit worried. But still, this is a long-term hold for me, and I do not plan on selling anytime soon. Hold to at least $2. SMH. It's not even really trading down. Sndl is right where it closed yesterday. Oh yeah. That's a good point right there. Yeah, we're at $1.54 right now. Previous close at $1.54. So yeah, it's not like we're like down 5% today. We're down 0.65%, only down 1 cent really. So yeah. I was dumb. I hold when it was at $3 and took it out. Hey, I mean, like, if you're worried about your profit loss and stuff like that, then I say just keep on holding. And this is my opinion, obviously. So please do your own research. Don't listen to everything I say. I'm not a financial advisor. I'm just a guy making YouTube videos. But yeah, I say just hold up. Like I say, continue holding until a price that you're comfortable at selling at, whether it's profitable or whether you take a small loss. I say just do everything you can to minimize the losses. And I mean, just like in the last 5 days, look where we were. $1.34. We're at $1.54 now. And just over the last month, look, we're at a low of $1.14, and we actually broke. I think the lowest we reached was a 92 cents at one point. I mean, look where and like look where we are now. Excuse me. Just buying and holding, I feel like it's like the best option you guys can do. And just bought back in now though. Yeah, good job, good job. Diamond hands. When do you think it will go back up to $1.70? I feel like possibly tomorrow. I mean, I gotta get into this more tomorrow. I'm gonna break down the charts a little bit more in my video today. So my video later today, I'm gonna break down the earnings call. I'm gonna break down the stock charts and like analyze them and just give you guys all the information that I'm seeing. So yeah, so when do you think it will go back up? So tomorrow, I feel like we could just see I mean, it depends how we close. It's only 12 o'clock. We still have 4 more hours, so it really depends on how we close. Um, but yeah, but I think like from what we're at right now, I feel like tomorrow, we could just be more like stable throughout the day. Just kind of have like maybe stay in like the same like 5 cent range, but not really see anything too crazy. But also not like dip down and crash like we did like a month ago. So yeah, yeah. I mean, we just have to wait and see. It's too hard to like say right now when we'll go back up. I mean, right now we are trading at $1.54, which is at our previous close. And right here at this point right here, this is actually where we dipped below to $1.53, but we weren't there for too long, so that's why it doesn't say $1.53. But once we dipped below into the red, we immediately popped right back up to $1.56 and in the green. Then right now we're trading just on this line right here. So yeah, I mean this could be our bottom right here. We just have to wait and see. It's too early to tell right now. I trust DJ though because most of his predictions have been correct. Well, yeah, I appreciate you guys trusting me, and yeah, I mean, most of my predictions for Sndl have actually been correct, and I mean, today I was expecting to get to $1.75 with the hype of the earnings call. We got to $1.67, and can I see the high for the day? $1.68 was the high for the day, so I was wrong about that. And I said if things do not go as expected, or if we do sell off after the earnings call, then $1.48 will be the line that like I think we'll be testing. And we have not reached down to that yet, and I'm glad. I hope that prediction doesn't come true. I hope we stay above $1.48. But yeah, I mean, I would say about like 90% of my predictions have been correct so far, and I mean I'm thankful for that. Thankful to the stock gods for that. Hopefully we can keep that up. But also, like how you say you trust me. I mean, I appreciate that. But also, please do your own research and stuff like that, and develop your own opinion on it. And I say use my videos as a helping hand to help you guys form an opinion. But just also do your own research because, like, if I am wrong, and if you're trusting all my opinions and my predictions, but then I am wrong, I don't want to be the reason why you guys are losing money. So yeah, so just always like I say, just take my predictions like as like a helping hand, but also try to form your own opinion. And if you cash out, Uncle Sam will only take 40%. I think is it 20? What's like the I think it's 28% they actually take out. Oh, I don't know. People are too impatient. Good investments don't happen overnight. Just buy companies you trust in and hold. If you're an emotional investor, then the stock market probably isn't for you. And I agree. Now here, let's bring up Tesla again. Here, look at this. Look at this Tesla. Trading in between $40 and like $60, hit 70 a couple times, then went back down to the 40s, and then I mean 2020 happened. Tesla, all Tesla. So yeah, like I mean, for the people who like, oh yeah, electric vehicles are the future, so I'm gonna buy in right here. I'm gonna buy in at third. I'm gonna buy in at right here. Let's say bought in at 2017 at $42. Then you hold it for 2 years, 2.5 years, and guess what? You're only up like $2. But you hold it for another 2 years, and look at you, up, up 800. So yeah, buying and holding is the safest form of investing, in my opinion. Well, I mean, obviously, if you're going all YOLO into penny stocks, then that might not be the best option. I don't recommend having more than 5% of your portfolio in penny stocks because penny stocks are risky. And right now, I think Sndl is taking about 4% of my portfolio. I do believe in this company, but I think for me to put more than like 5% of my portfolio into them, they would have to reach above $5, I would say. I would have to see like it because like this quarter and their fiscal year was really good. If they can continue to do this for another year or another 2 years, then I would be very comfortable putting more of my portfolio, like putting like maybe up to 10% of my portfolio into Sndl. Yeah, we just have to wait and see. Hit that like button. I agree. Hit that like button, guys. I mean, if you guys hit that like button and subscribe, that really helps me. It helps me grow my channel a lot. I mean, you guys hear this in all the intros. Helps me grow my channel, and it helps videos like this reach more people. And yeah, I mean, hitting that like button really does support me. So if you guys like the content, if you guys support my videos, then yeah, feel free to subscribe because that helps me out. One second, guys. 1 second. All right, I'm back. Okay. Don't worry, I do my own research. Well, okay. Yeah, good job. Just want to make sure. Yeah, it's good. It's good you do that. I say let it crash, and then I'll buy more and ride to the moon. Yeah, I mean, if that's what you plan on doing, then good luck, man. Yeah, right now we're still holding up pretty good. $1.56 actually. Yeah, that's great news right there. You guys can still hear me, right? I just want to make sure you guys can still hear me because I just moved around my computer a little bit. Yeah. All right. Oh, the earnings call. The earnings call actually already ended. It already went through and everything. Um, Hold on, guys. 1 second. 1 second, everyone. I I apologize, but I'm responding to a text message. This is a little bit important right now. Hold on. All right, I'm back. Okay. How many shares do you have of Sndl? I got 400 shares right now. But I think actually it's closer to 390 shares. I bought in at about my average price right now, since I did buy a little bit more. My average price right now is like $1.05, and Robinhood's not loading up my computer, so I would show you guys, but I can't right now. Here we go back to the moon. Yeah, hopefully. I mean that's the plan. Yeah, like I said, I feel like this could be our bottom for the day, and we've bounced back up from there. So 5,000 shares at $1.15. Yeah, congratulations. Get in while you can. Yo, we can still hear you. Also, I am at 0.97 with 1,000 shares. Good job, guys. Good job. And yeah, also like I wish I could have bought more shares. I really wish I could. But most of my money is put into Tesla right now, as Tesla takes up about a little over 50% of my portfolio, and I'm proud and also not proud to say that, because I do need to work on diversifying, and that's what I have been doing. So yeah, but I mean at one point Tesla was actually taking up 72 or 73% of my portfolio. I think that's the highest it got to. But then that's when I was like, yeah, I need to diversify, because look, as Tesla has been down over the last month, if I still had all my portfolio in Tesla, I would still be down. But because I diversified, I'm still up. I'm still up in my portfolio. Well, I mean, I'm still up. Actually, I still have profits, considering I bought into Tesla when it was at 350, 400 in that range. So yeah. So yeah, I'm still doing pretty good right now. 10K shares. Good job. Good job. When will Sndl's earnings call be posted on Robinhood? I think if you go to the stock, like go onto Sndl stock and Robinhood, and then like scroll down and look, then I think it might be there. Might be there now. I'm not sure. No new articles yet. Yeah, it's just Motley Fool. This is 2 hours ago. 5 key takeaways. Actually, yeah. Let's take a look at this, guys. 5 key takeaways. When will the conference? When will the conference start? The conference already started. It's already ended, actually. I bought at the wrong time. I have like 250 shares at $1.76. So I'm waiting for that push so I can hold the stock and be in profit. I would average down, but I don't want to put most of my portfolio to be Sndl. Yeah, I agree with you on that. Yeah. Well, I mean, it's always good to average down. Like if you can average down, then I recommend doing that. But also, yeah, like do not let Sndl be most of your portfolio because like it's a penny stock. Penny stocks always have risk. They can always fail. They can always go back down to below $1. You never know what can happen. Okay, so this article right here by Investor Palace right here. Sndl's stock, 5 key takeaways from Sundial Growers Q4 results. So yeah, I'll just go over this quickly for those who were not here. All right. Yeah, so for those who don't already know, the earnings call actually already started and it already ended. And I think the live stream, we missed the first 5 minutes of it, first 4 or 5 minutes of it, but we got most of it. So, number one, while the firm announced a net loss of $64.7 million, that's $51.4 million in United States dollars, that was an improvement on both quarter-to-quarter and year-over-year basis. Those comparative respective losses were 71.4 million and 145.9 million. So yeah, I mean, they're right there. They're already, excuse me. They're already making steps to becoming profitable, which is just great. Like they're increasing their revenue and they're also decreasing their general and administrative costs. So they're doing better. They're making more money while also spending less money, which is just great. And they cut down their general and administrative costs by 18%. By the way, net canvas revenue of $13.9 million Canadian dollars was up 8%. I can't even pronounce it. I'll be honest, but down more than 5% year over year. And the reason why they're mostly down 5% year over year is because they switch from wholesaling to their own branded name. And before they were wholesaling, so that means they were selling in bundle a place like Whole Foods where they get bundles of food, or the places that that wholesale to places like Stop and Shop and grocery stores. They were basically selling their product in bulk to these big name companies, and then big name companies would buy it. And then that's how Sndl would make money. But this year they switched, and they actually 75% of their sales were their branded sales, which is just great. So, yeah. So I mean, this obviously when you look at it like this, it does seem a little alarming. They're down more than 5% year over year, but they failed to in this article they failed to talk about how they switched from the wholesaling to branded net sales. So the branded net sales is something that will help this company a lot more, and in the long run, this will make them a lot more money than wholesaling. These results showed adjusted earnings before interest, taxes, depreciation, and amortization from continuing operations loss of $5.7 million Canadian dollars in Q4. In the preceding Q3, the firm posted a loss of $4.4 billion. So I think they're trying to say here that they're trying to say that they're losing more money in operation costs. Yeah. But also, like I said before, how they're cutting down. I don't remember them mentioning this. I must have missed this for a second right here. I do not remember hearing them say that. If the people who are watching the live stream, if you guys were here for that, please comment on the live streams. I'll be honest, I don't remember hearing them say that, but I mean, this is what this article is saying about that. So yeah, but I mean, also remember they cut down their general and administrative cost by 18%. So basically, they're putting more money into operations while also cutting down on their cost and administrative cost. So basically, it cancels out. So this is just this article. Same thing they mentioned with this one here. They're kind of like saying they're kind of like putting like negative news in here without actually putting the reason why. So I mean, yeah, they may have lost more money like from operation cost, but they also cut down spending in other like sectors and aspects. So yeah, I mean, it just basically cancels out. Uh, the company said average gross selling price per gram equivalent of branded products was 5.05 Canadian dollars per gram in 2020, net of provisions compared to $6.24 Canadian $6.24 in Canadian dollars per gram in the prior year as a result of industry-wide price compression and a shift to value product. Sndl anticipates continued downward price pressure throughout the industry in the coming year due to continuing competition and relative oversupply. Yeah, I mean, I don't really understand why. I'll be honest. This article, there's not really the information that like if I'm someone who didn't watch the earnings call and I came here and looked at this, I'll be like, oh, like okay. I mean, yeah, more cannabis is becoming more and more like popular. So yeah, the price of the gram is going to go down because there's more of it widely available. So yeah, sounds like a passive aggressive hit piece. Yeah. Yeah. I mean, like I feel like this was just like they didn't need to add. I mean, yeah, they didn't have to make. They could have added this, but they didn't have to make it a whole point. Yeah, I don't know. Okay, and number 5. Let's see what this says. As well, Sundial said it had unrestricted cash pound balance of approximately $719 million Canadian dollars as of this week. That's no surprise, as the company has been able to raise a boatload of money in equity markets, recently tapping the market on February 20th for $75 million, which added to an already impressive war chest of over $600 million Canadian dollars. Okay, yeah, that's a good point right there. They made that, and I wish they would have mentioned that on December 31st of 2020, they only had $60.4 million in unrestricted cash, in Canadian dollars, of course. I wish they mentioned that because that would have made this number like 719. Because, I mean, going from 60.4 to $719 million is just incredible when you look at that. So, yeah, I wish they would have mentioned that. It would have made the number seem a lot more astounding than it is. But, yeah. I mean, yeah, because they said they already had 600 million. But yeah, I feel like they really should have mentioned that they had that they only had $60.4 million at the start of the new year. They really should have mentioned that. That's important. Yeah. Okay. All right. So now let's take a look back at Sndl stock. What are we at now? $1.57. That's very nice right there, guys. We're holding up pretty good. I'm in at 55 cents. I am sure a good amount of people who say they're going to buy because volume doesn't even change through the week. It's run by day traders. Yeah, agreed. Yeah, I feel like the volume. Yeah, because somebody was commenting earlier, somebody else commented on the live stream saying, "Oh, the volume is so high, but how come the volume's higher than it was before? But how come the stock is down?" Yeah, it's because people right here, people were day trading and swing trading the earnings call, so that's why we kind of saw it go down a little bit. Yeah, I feel like that basically covers it. Oh, didn't mean to do that. I feel like that basically covers it. So yeah, I will be making a much more in-depth video later on today. And for those who just joined this live stream late or just haven't got all the information, basically the earnings call started at 10:30. I think it lasted about 40 minutes around there. Actually probably longer than that. But the earnings call started at 10:30. Lasted I think more closer to an hour with all the questions and answers that they did. And later on today, I'm going to be making a video breaking down everything that we heard from the earnings call and everything that we can expect to see in the coming weeks and what further announcements that they might be making. What is your price target in short medium term? I would say short term, like if by short term you mean like 2 weeks, I think we could be back above $1. I think I mean, it all depends on how we close out today. I think that'll dictate like what we're gonna do for the rest of the week. Well, the rest of the week, what was it? Today's Thursday, so I mean, we only have one day left in the week, but um, yeah, I'd say my short to medium price target is probably $2.50 to $3. But then again, I can always be wrong. So, yeah, predictions for end of the week. I think tomorrow, Friday to end the week, I think we'll probably see more stable days. So whatever we close at today, I think we'll probably trade around that same price tomorrow. Okay, guys, that's gonna be it for this live stream. So, I'll be making a video later today summarizing everything that we learned today. So make sure you guys go watch that video later on tonight. And if you guys haven't already, like and subscribe and turn on post notifications so you guys don't miss out on videos on Sndl and the stock market in general. And please like and subscribe because that helps me grow my channel, and it really helps the videos that I make grow reach more people. And I want to thank you guys all for coming out to this live stream. This is my first ever live stream too, so yeah, and it's a learning experience. I hope to continue maybe live streaming. It was fun to have you guys talk in the chat and everything. So yeah, all right. Yes, one more time for those who have not watched the earnings call or joined late. I'll be having a video up later today, so make sure you guys check that out. And yeah, thank you all for tuning into the live stream. Good luck, ladies and gentlemen.